Well, why does war create a government incentive for financial repression? It's because war is expensive, and ultimately, governments incur like a crap ton of debt during wars, and it is in the sort of servicing of that debt that they have this wild incentive to do financially repressive things. But if debt is like sort of the actual root cause of the repression, like we already have a debt problem. Like in Europe and the United States and Japan, like we have massive levels of debt to GDP already.
Yeah, I don't know. You'll have to decide where you think it's best to start off.
Steven, who was that babe in the background there? Who was your babe there?
Babe. Fucking
Aida, bless her soul.
She's single or what?
I think she is because her husband died.
Oh, Jesus fucking Christ.
I can't believe my immediate reaction is to laugh at that. I hate that that's my reaction.
Did you have a nervous laugh there?
Sorry, we'll just get rid of that in post.
Yeah, I don't like myself sometimes.
Jesus.
What better way to Steven to show off his wealth other than have the cleaner exit as he's recording a podcast in front of his baby grand piano?
Clean my rugs.
All right, guys.
Sorry.
Someday when you own a house, you're going to be like,
Whatever,
know what?
I have,
cleaning this thing sucks.
I rent a condo and I have
anymore.
a house cleaner.
There we go.
Sometimes. When the deep cleaning is not good enough. All right, what are we going to get into here?
We live? Is this on?
I mean, yeah, we're
Is
recording.
we're doing it? All right, cool.
Yeah.
Love these broken intros.
Yeah, let's do it.
Yeah, so we decided that we were going to talk about the new Arthur Hayes piece, our thoughts on it, repercussions of it, thoughts on the world. So Arthur dropped a new, not at all brief piece, which Medium told me was going to be 31 minutes to read the other day. So that was great.
What grade reading speed are you?
Only took me 26 max.
I've read enough Arthur where I can skillfully be like, this is just him being cute for 9 minutes of reading here.
I admittedly skipped 9 paragraphs because I was like, this is obviously preamble.
Yeah, there's a lot of like kind of dramatic writing and Sir Jerome, and it's very cutesy, but I had no time for it last night. Anyway, Arthur is basically telling us as the TLDR that the world is going to enter into a state of war. And as a result of this war, our governments are going to financially repress us all. And that Bitcoin is going to be our ticket out of this financial repression, the only thing that will save us.
Our digital savior.
Yes. Nick, did you read this in depth enough to? Would you like to give some further bullet points of just how he says this is going to play out for the audience?
Yeah, I
doesn't
mean,
have 31 minutes to burn.
Sure. I mean, he draws some comparisons to history, where in World War II, the U.S. enters the war and it needs to finance a war and it issues war bonds, and several countries have done this, in their own right, and war bonds are a way essentially to financially repress citizens. And the way they financially repress citizens is that they have negative real rates. So the rate of return on the war bond is way less than inflation. So you can imagine during war, supply chains dry up, costs go, maybe there's some hoarding of goods, maybe the government needs those goods and needs to take them from you. That could be gold, it could be steel, it could be all kinds of things. So commodities go up, and inflation maybe increases and persists during wartime. And what better way than to afford that and pay for that war is then to offer war bonds at a lower rate. So they might offer 2% interest rate or very low interest rates. Inflation could be really high, and essentially we inflate away the debt that the governments go on. So that's kind of like at core of what he's saying is that if we do, and then he looks forward to US and China and says, if we do get in a war, to make your move to prevent being financially repressed, it will be too late if war already happens. And so he's basically saying, you need to plan now. You need to think of this scenario now. And he proves that, or makes the point that Bitcoin is not as easily confiscatable as other things. For example, money in your bank account, stocks, bonds that you own, maybe physical items, and that because it's decentralized, and the game theory plays out if they shut down mining in the U.S. and that it'll be financially advantageous for other countries to start mining Bitcoin. That it's actually a lot harder for the government to take that away from you, and it may be your only source of hope in the time when a government's at war and they need to take what they need for the state to persist. And throughout his article, he basically says when the state is at war, the state will always win. And he used COVID as an example. If you think that you're going to get out of what the state wants, we had a war against an invisible virus, and there is plenty of evidence to show that we shut down businesses, we did several actions, took vaccines, had all kinds of mandates and regulations that most of the population almost happily followed. And so he says that the state will persist in any type of war, specifically kinetic war. So I don't know, let you fill in the blanks from there if I missed anything important.
You want to take
so
this,
my first question to you guys is are we in this war right now? Does it I know that Russia-Ukraine exists and that we're contributing dollars to that conflict and that China is playing a role on the other side. But are we in this war today?
Well, can I maybe take a different angle at that first?
Sure.
I want to know, are we in financial repression right now? Because
wait, I want to answer your first question first.
Okay, go
ahead.
And
then let's answer that question.
All right, let's go.
Because I have a few issues with this Arthur article. I don't think it's quite as incisive as some of his other pieces. Has a lot of glaring holes in it, in my opinion. The first problem I have is that he sort of solely centers this idea of financial repression around requiring some sort of war to break out, be it a kinetic war or some sort of cold war, right? But I would argue that that's not at all a prerequisite, and we are already, to answer Nick's question, in sort of early stages of this.
War is almost the lowest probability scenario for financial repression to occur.
Well, why does war create a government incentive for financial repression? It's because war is expensive, and ultimately governments incur a crap ton of debt during wars, and it is in the sort of servicing of that debt that they have this wild incentive to do financially repressive things. But if debt is sort of the actual root cause of the repression, we already have a debt problem. In Europe and the United States and Japan, we have massive levels of debt to GDP already. Regardless of whether
more
war
debt than
already
we've
exists.
ever had in any point in time in history when there were kinetic wars. More debt today than ever.
Yes. So to answer your question, it almost doesn't even matter. But also, I would argue that we are obviously fighting wars, right? We're obviously fighting a kinetic war right now, sort of by proxy in Ukraine. But we've got some kind of Cold War type stuff going on with China. There's obviously a sort of, axe hanging over our heads right now with the chips in Taiwan, and will they or won't they invade, and what is that going to have in terms of an impact on us, right? So there's definitely a lot of further catalysts down the road, but we are already in a bad state, and our European counterparts, I would argue, are in the worst state. I actually don't think that people in America are in that much danger of this, but I think people in the EU are definitely absolutely screwed, and this is sort of an inevitability for them if it's not already happening right now.
I think
so. Hold on, just when you say something like that, I just want to know what you mean in terms of ramifications. You come out hot. What does that mean for a citizen of the EU?
Well, so I think it's good to kind of roughly define financial repression and give a few examples, because it'll start to come clear, I think, what we're talking about and what could happen.
I mean, should we define it a little more specifically?
I mean,
I guess
I define it as basically a systematic transfer of wealth from citizens to the government, particularly when the government overspends. And one easy way to do that is turn savers, citizens, into negative real rates. There are other ways to do that. China does it right now. They have capital restrictions. You can't move your capital outside the country. That's a form of financial repression. You could move short-term interest rates down to zero when inflation is running high. That's a form of financial repression. You could allow inflation to run above target. So the Fed in the U.S. could let inflation run at 3 to 4%.
But that in isolation doesn't work unless you also get bond yields to systematically run below inflation.
Lower, correct.
Financial repression
you need an influx of capital at the same time as that.
Correct. So like how do you get the ability to borrow money persistently at a rate that's lower than the prevailing interest rate, which your borrowing practices have largely caused? How do you do that? That is sort of the essence of repression. As Nick said, you are taking money from the private sector and sort of systematically channeling it into investment vehicles, which it would otherwise not want to go into because it's clearly a bad deal. And in the past, as you said, with the World War II bonds, right? Those are a bad deal. I think people lost like half of their purchasing power over the course of a decade on those bonds, which is nuts.
The wealth was transferred from citizens
that was a transfer of wealth from like patriotic, good-hearted, unknowing citizens to the government. Now, I think the populace is more sophisticated these days, right? I think we obviously are, in spite of what you may see on TikTok investors. People aren't going to take that by and large, right? So the ways the government does this has to be like a little more subtle, a little more nefarious. I think one thing that you didn't mention, Nick, is that there are already like massive pools of capital for the government to access, for example, via the most obvious low-hanging fruit, I think, is like pension funds, pension retirement accounts, like a lot of money in those.
This is after quantitative easing, after just printing more money, right? You're talking about the next biggest pool to
Yeah, like I'm talking about like capital that exists like out there already that we could repurpose, if you want to call it that. One is like pension funds, right? But so you could, for example, as the government, just pass a law that just says all pension funds must hold a minimum of X percentage of their assets in like treasuries.
You could also do that for 401k plans, right?
Yes, 401k is another good example. You could do that. The other place you could get stung is like index funds, mutual funds, like wherever you have like a large pool of capital that's sort of centrally managed by like one entity that is really like answerable to the government. If your money is in any of those pools, you're going to be like really susceptible. You are the low-hanging fruit to be sort of like taxed in a way.
There's so much money in this shit. Like, have you guys looked at the pie chart of seeing where like America's wealth exists? Because
where is
like I haven't, but like I think if you just aggregate pension funds, 401ks, and I can't remember the third thing you said, but like, oh my God, that would be so much money.
Yeah, and I think it's this question is important because we have a very highly leveraged world economy. Like, not only is our country highly leveraged, but the whole worldwide economy operates off debt and, pretty high leverage debt. And so the question is like, how do you unravel that at some point? And financial repression is the tool at hand if you're a state. If you're governing from the state's point of view, that's the only way you have to unravel this. So as investors, and also as just people, looking at like what's politically feasible in the future, this either ends in like complete deflationary economic destruction or a systematic way for governments to unwind their debt.
Well, there are a few.
I think it's such a semantic problem. Like the argument is semantic because I think even when like Arthur in his article, he describes when FDR was going through the FDR administration was going through like how a dollar was backed by gold, and then they said like, okay, well we're not gonna transfer your dollars to gold anymore. Like that is still semantic because it's like they're not and even like with war bonds, they're not telling you that you have to buy them. They're just saying that they exist. And for those who choose to participate, they can. And that's like, it's repressive in dollar terms, right? It can be repressive in dollar terms, but without being repressive in like authoritarian, autocratic sense, like where it's like, you must buy these war bonds, right? And that's a different level of repression, because I think like some people are going to be duped by, like a negative EV proposition. And that's not repression to me.
I mean, it's repression under the. I guess if you want to get technical, it's repression under the definition of the Stanford guys who like coined this term in the 70s. We can argue about like whether it is actually repressive. I think it becomes like a Tina thing, right? Like you can corral all of the capital into a barrel. You want to shoot fish in a barrel. Well, you corral all the fish in the barrel first. The capital is your fish, and then it can't go anywhere else. So you can pick it off. Like if you successfully implement, like a good example of this is UK, right? In World War II times, you couldn't sell a security without the government approval. Like never mind transfer any money out of the country, right? So once you've corralled all the capital and it can't go anywhere else, then it becomes very easy to have like this sort of kinder, gentler sort of like financial repression. Like the protection racket. It'd be a shame if anything happened to your capital just sitting there. Just be a shame if you didn't get 2% a year. We're gonna nuke it like 5. It'd be a shame if you can't go anywhere else, right? It's kind of that type of thing. But most people I think aren't even gonna be aware of it because they are putting money into a 401k. They're investing into an index fund. They're in a pension plan. They won't even know. That's like the kind of pernicious thing about this.
I mean, I agree that it's mostly optional right now, and I think what we're really talking about here is like what happens in the next step forward. But I would also argue that the push for financial repression does not come from once there is a debt to pay, pushing people in some of these lower return, negative real return assets. It really comes from the original sin, which is printing more money, taking too much debt, and too much spending. Like I think COVID is an example. Like the COVID response caused us to basically shut down the economy and force people inside, which then we needed to stimulate the economy and print more money. And right now we're paying for that in negative real rates. And so I think the financial repression comes from the original sin of having to do that. And there are other scenarios where this comes up, but if there is a war potentially in the future with most likely China, then there could be things that are done. The government could take the next step. And the question is, do we really have to prepare ourselves? And is Bitcoin the right answer?
Well, I think.
Okay, so I guess my question is,
it.
like, if we're going to use history as a proxy to today, I'm looking at the article and I just Googled it. Like, here's the quote in the article. It says, only Secretary of the Treasury, Morgenthau, who was the Secretary of the Treasury at the time during FDR, he said that he was in opposition to the plan. His point was that the voluntary way was the democratic process. So like only people that would opt into the war bond would pay for this like negative EV thing that was like a negative real return. So just so we're clear, like, are you suggesting that, we're in a wartime today, and that B, they will take the next step beyond what FDR took, which is to force citizens to pay the government with their savings? Because in this example, they did not. They allowed people to opt in.
I don't think we're in that wartime footing now, by no means.
We as in the U.S. or
Europe? we in the
U.S.
Europe, whole different story. But no. But I think Arthur's making a case that if we did get in a kinetic war, these measures would be implemented over time, and it'll be half of a persuasion tactic to get people to be patriotic and invest in these, and then
right,
half
and you saw like examples
forceful
of that persuasion over time through like advertisements. It was like, we love America, we support the war, buy war bonds, etc. But that's also not financial repression to me. That's we
don't have to do that anymore, right? Like in World War II, like times, like, Social Security didn't even really exist, right? Like all these government programs didn't exist. People weren't investing in people had like a lot of cash. They had like their own investments, right? So it was a more difficult process to part people with their money. Today, nobody has any of their own money. Like, how many people manage their own portfolio and do so by opening a brokerage account in their name and just buying stocks under their name? At a minimum, most people buy like an index fund, and most people have like 401ks, or they invest. They have like a pension. Like, so it's almost like not a fair analogy to compare the modern world to World War II. We don't have to convince people to do anything. We just have to.
It would be much easier. I agree with you.
Yeah,
they
centralized
could easily sequester those funds much more easily than in FDR's administration, for sure.
And this leads me to.
Are you thinking that's a path that they would take during wartime, as Arthur Hayes suggests?
Okay, look, so I want to even just get off the war. I guess for Europe, the wartime thing is kind of relevant. Like, I would argue that Europe is at war right now, even if you don't want to consider it like a full-blown kinetic war. The EU is in some sort of energy war, right, with Russia, clearly. But to me, that's not even relevant. Like, the problem was already there without the war. The problem was already there, and then like COVID sort of was like the match that really lit the flame. Like, we had all of this like excessive QE and money printing, but it didn't matter because the money wasn't getting into the system. So there was no inflation. So the governments could keep the central banks could keep issuing this, or keep promoting this like growth of debt and doing QE. The money never made it into the banking system, into the general populace, because the banks had no incentive. They didn't want to take on any sort. They just hoarded the cash, basically. They didn't get out there. There was no velocity, right? What changed during COVID was the government said, banks, lend this money. We'll basically guarantee no losses for you. So the banks were like, okay. And suddenly all of this cash goes, whoom.
And you're describing PPP and
PPP, IDL, disaster loans.
COVID.
Yes. Yeah. So that sort of like is the match that really lit, like, so now there's like a roaring fire burning everywhere, right? And to me, that is the main thing. I don't want to like. I think Arthur's piece is too focused on war, and I just don't think the war is that relevant. The other thing about Arthur's piece that like drives me sort of crazy is like he has this thesis that like you have to buy Bitcoin now because they're just going to turn it off and it's going to be too late. Like, how much money does the government have access to via Bitcoin, and how difficult is it to confiscate Bitcoin versus how much access does the government have to gigantic pools of capital via pensions, via mutual funds? It's like trillions of dollars in capital with like the stroke of a pen they can just absolutely corral, versus like they're going to go after like billions,
hundreds of billions, maybe.
Yeah, it just makes no logical sense to me.
Well, let's talk about the first one first. And I think like you bring up a fair point. Like, war doesn't necessarily, it's not necessitated that we mention war in this conversation, but he does bring up the point that like during peacetime, like the government doesn't need to enact these policies. So it's only when it's required. And during war is when it's required. So like, to your point, like, I don't think that they would come in during peacetime, but when wartime comes, what you find is that the laws are superseded by the state's needs.
Totally. In one scenario you could see is if we do go to war, maybe they don't provide that backstop. Maybe they don't provide that extra liquidity, and naturally people risk off and kind of go into these safe havens, even though they have a negative real return. Do you see that possibility? And again, we're talking about the war scenario.
We are in the risk off thing right now, right? And I think a danger for people is they sort of get conditioned to this idea of dollar equals safe, which it is right now.
It's been the highest returning asset, in this last
it
year.
Has, but we're like creatures of habit, and like much like we all got acclimated to stonks only go up, right? I see it around us right now. We're all getting acclimated to dollar only go up, but that's just not going to be the case, right? So there's a few ways that this can play out. There's
Dollars
too
hitting
much.
120.
Yeah, there's.
DXY is in 120.
I'll fade that, but
I'm for it.
there's only a few ways they can play this. This can play out, right? There's too much debt, and there's not enough GDP. This is unsustainable. We can't keep growing like this. So you have austerity, you have default, you have hyperinflation, you have massive growth that just grows us out of the problem, or you have financial repression. Austerity is not going to happen. It's massively politically unpopular.
Right.
Default isn't going to happen for similar reasons. You will crush people, and you will just get, in many countries, dragged out into the street, and bad things will happen to you. Hyperinflation, same exact thing. Again, social unrest. High growth would be ideal, but it's just sort of unlikely.
And I also think that's only on the table for the United States.
Yes.
I think that's an only way out. That the United States actually has enough innovation, the human capital, the right materials to put together a fast growth economy. You could make the same argument for China, but like their GDP growth is really fueled by debt, and if you stop putting in the debt, I don't know if GDP grows at 5-6%.
Well, would you agree with the idea though that the U.S. actually kind of has like a different way out, and that we can kind of we have like the dollar as a release valve, and like other people are sort of forced to buy it.
We're using that now.
Yeah, and Europe is the one who's like doesn't have this. That's why I kind of think Europe is the most.
Let's just remove Europe and U.S. from it. Like I think. If a nation state is faced with the choice of austerity versus repression, they'll choose repression.
Yeah. Like repression of those 5 options is the only one that's palatable in a world where high growth doesn't happen, which is most worlds, let's be honest, unless somebody invents cold
US
fusion
might have
tomorrow.
The other nations might not. So I think repression is more and more real for them.
Yeah. So if you just sort of like logically go down that like kind of analysis, you're like, okay, well, they're going to do these things to basically like force capital into this. They're going to corral capital, and they're going to inflate away the debt, and we're basically going to pay for it via suboptimal returns and inflation, right? So I guess that leads us to, okay, so Arthur has some holes in his theories. Do either of you think that Arthur's theory is sound before I just move on there?
So when you say Arthur's theories, are you talking about his Bitcoin theory, or are you just saying that financial repression is the I think
he's right on financial repression. I think he's focused too much on war, and then I think he is both wrong on the sort of path-dependent way in which like Bitcoin kind of gets into this, and like how much urgency you have, and then also I would argue on the effectiveness of Bitcoin. So we can kind of touch on either of those points.
So let's hit each one independently. I think he's underplaying, and the tinfoil guy from episodes ago thought that we were already in war, and I think he's underplaying the fact that we're in war today. I think so. I think we're in war now. I think that risk you're completely underplaying. So how that manifests itself.
So I'm not underplaying risk. I just think it doesn't matter because you're already it's already there without war.
I agree. I think it does matter, but he just missed the like 5 other scenarios in which financial repression can happen. Like he was spot on presenting that this is a risk, but I think the causes of it. He focused too much on kinetic war. So to your point, Eric, we're not at kinetic war with say China, but I like this phrase. A hot war in cold places. And that specifically means like cyber, financial war, like war over commodities, shoring up supply chains. Like that is hot war in cold places, and we are most definitely in that phase.
Right, and that's the way that war is going to probably persist going forward in a world in which everybody has nukes. Like we don't want to play a kinetic war game where we have to eventually kill each other.
And
all of us.
I will say to his point, I mean, you use like Archduke Franz Ferdinand in World War I as an example. Like all it takes is one potential event to kick off a world war. So, I think he does kind of slightly mention this in the article that like we are not at kinetic war now, but like it could be one slip up that then, starts a very fast falling dominoes to get you to that place. And at that point, it's too late. But
well, let's assume that this is all happening. It is going to happen, right? Now, let's assume we just move to the phase where we're like, we gotta protect ourselves.
I like that.
So
yeah.
Eric, what are you doing? I mean, do you agree with that? Like in the midpoint of the article, like there's just big caps like get out, and that's kind of the thesis.
Yeah.
Exit the system. Bitcoin is the only thing that lets you exit the system. Like, do you agree with that? Is there a better way to sort of protect yourself? What do you think?
I'll tell you that when I was reading through that section of the article, I felt solace, and this is not like me telling you what's right or what's wrong. I did feel solace that like I have a bunch of money on the blockchain, like regardless of which chain we're talking about. It's like the Ethereum chain, the Bitcoin chain, whatever. Like I have money that is outside of the government's purview today, and that felt nice to me. I still see weaknesses within that, but even like at that level, I'm already feeling more secure than like having all my money in fucking Fidelity, where it's like, Jesus Christ, like,
I mean,
is this gonna
do
get
you think
fucking
there are
sequestered?
any non-blockchain ways to guard against this?
I mean, there are a lot of people who exist in my TradFi sphere who like still hold like gold physical, like buried in their backyard, and like silver coins.
Good. I mean,
and like cash under their mattress.
Seems
like,
pretty good.
This is like a real thing
Yeah.
that I deal with, that like, these people don't think of the blockchain, but this is a real thing.
Yeah, I mean, so real quick, the problem I have with like gold and silver and Bitcoin, it has this very big assumption overlaying it, which says that you can actually buy goods with these things. Like you can, I don't know, sliver off a piece of your gold bullion and go pay for food with it, or transact in Bitcoin in a global economy. And like, I think that's a pretty big, tough assumption to swallow. I do know that like the Citibank's private bank did put out a note on how to survive financial repression, and they make the case that debt is at wartime levels already, and so how are you going to do it? And they're and I don't necessarily agree with this totally, but their recommendation was dividend yielding equities, and they looked at previous points of financial repression and how they described it, and they showed that like if you reinvest the dividends, those equities outperform inflation during those repressive times. But in the scenario where Steven's talking about, where you have money in a pension plan or in a 401k plan, and we do implement those things where essentially you're forcing people out of risk assets by kind of placing a floor on how much they have to buy treasuries, then that is not necessarily good. I think that's a stretch. For me, I do think, even though I just kind of shut it down, I do think, having a little gold and a little Bitcoin on the side that maybe no one knows about is good. I don't know how it'll play out. Like, I don't know how I'm going to use it, but if everything really goes to shit, maybe you could use it. But I mean, I think I think holding US dollars is the best.
So here's my
holding
question
US
to you
dollars
guys,
is what you don't want to do in the financial repression.
I don't think so. Like,
so how about this? Like,
they're telling you that you're going to lose half your purchasing power in a decade. You want to hold dollars?
and
Isn't it even worse than the war bonds?
Has Arthur Hayes' Bankless episode come out yet? Because when David was on ours, he said that he interviewed Arthur Hayes, and he made a point that stood out to me. He said that Arthur denominates his whole portfolio in energy.
Yes.
Like
right.
Energy, like in kilowatt hours.
And he makes
so
a point.
like,
Go ahead.
is that right? Am I understanding that right?
He makes a point at the end of the article. He's like, eventually, if this thesis plays out, you will know the amount of Bitcoin for a barrel of oil, not the amount of US dollars.
Okay, so with that being said, like if that's his take, then like, I mean, we've seen how Bitcoin can be regulated in Canada. We've seen how crypto can be regulated in the United States, Tornado Cash. Like at like the end user state, crypto can be regulated pretty easily. So, I mean, what's the best? Like, I mean, I'm not condoning just like sequestering barrels of oil in your backyard. Like, what's the way to do this?
I think so. One of the problems I have with his thing, and he sort of glosses over it with the price of dollars doesn't matter anymore. It just won't matter. It's just oil, and that might be true, but like his thesis that like if you buy Bitcoin now because the government's going to ban it, and then you have Bitcoin and you're good. In between that, like the price of Bitcoin nukes like 90%. Right. Doesn't it? Like, so that part is written to be like somebody who like doesn't use Ethereum, because I feel like if you use like any sort of just basic like thinking ahead, you're like, okay, well, I get the idea that I want to keep value outside of the system. Totally agree with that. Great thing to do. But you don't want to immediately put that value in Bitcoin. You want to hold the value in like non-confiscatable stable coins. And then when the nuke happens, then you want to use those stable coins to buy Bitcoin. I don't know, maybe you buy like Ren BTC and then port it over to like actual BTC or something. But surely there are like a million ways to play this that are better than buying Bitcoin now and then getting nuked 90% and then just being like, it doesn't matter, I just denominate in oil anyway.
Sure. I mean, that's a good point. And I would just only push back to say like most people who even use blockchains are going to be like, okay, well, USDC just bent over backwards for Tornado Cash. Like,
well, don't use USDC, or do use USDC, because I don't think they're just going to wake up one day and just freeze all you. I think there'll be some warning, or like you'll see like, the world's getting kind of messed up. Maybe I shouldn't have all my money in USDC. But like that point is good. Like you should be cognizant of how centralized your stable coins are and diversify.
I still don't understand why like US dollars isn't the best place to go. So like let's say you have a bag of US dollars and kinetic war breaks out. All the other fucking asset classes are going to go down. So maybe you save some bags there. Best way to start off this kinetic war is holding US dollars and then play it out, because we're seeing this play out now where inflation happens, supply chains shut down. There's like systemic inflation. There's hoarding of commodities. And then, every country is going to need to buy those same commodities, which is priced in dollars. And which side of the equation do you want to be on? Do you want to be in US dollars, or do you want to play in some other currency? At least relative to those other currencies, your currency increases in value. And, maybe if you're talking about, 10% inflation for a decade, yeah, that's pretty fucking rough. And you might have to take more risk. But I still think, we're talking about preparing for this scenario. Holding dollars, even just dollar-denominated assets, I guess, like even U.S. equities, is a good place to start it off.
But the whole point of this argument, if you believe it, and that's a caveat that people should think about, like if you believe it, the line of thinking goes, once you hold dollar-denominated assets in a particular vehicle in which they're under U.S. jurisdiction and just subject to laws, confiscation, whatever, you've already lost the battle once the regime of repression starts, because you are going to enter into an inflationary era, right? Like maybe the best case is the baseline of 4 to 5% a year, right? Maybe that's the best case. That's not good, But if you're holding dollars because you're like, dollars are going to be great. At a certain point, if all the capital gets corralled, you can't exchange the dollars for anything else. And that's why you capitulate and go into bonds and get like kind of owned.
So I think if you are lucky enough to hold US dollars, your biggest risk in this scenario is heavy debasement. Right, the U.S. government is going to print a lot of money. I don't think,
or heavy taxation.
Right, that's the one I'm most worried about, which I had in my notes to touch on. But in the case, I think the most likely case is heavy debasement, lots of printing of money, and the U.S. can do that because, well, they own the money printer, and I do think there's this balance that they will play that will be more politically advantageous for them. In geopolitics terms, to not put on the hooks to the U.S. dollar, to not put these vices in play because I think it benefits them that people want dollars.
Okay, so
because it allows them to kind of move chess pieces around and say, country A, B, and C, you want on our team? Okay, here's the terms we offer you. You politically, kinetically align with us so that you have access to dollars, and XYZ, you don't kinetically and politically align with us, so you have no access to US dollars.
I sort of agree with you.
By the way, this is like dollar milkshake, Brent Johnson's kind of like line of thinking.
Yeah. The caveat is what you're saying is true at the beginning of the war, but at that point you do want to purchase assets at a discount, but you can't because you're trapped in the system, and the assets you purchase, even if they go up, those gains will be repurposed if you believe in the repression thing. The other thing I would say is like I kind of agree with the broad sentiment that like if you were in the US, this is not actually a big risk for you. But like 95% of the world population is not in the U.S. Is it 95%? It's probably about 95% of the world population is not in the U.S. and they are subject to the risk, especially
case,
Europe. So what about those people? What do they do?
Stablecoins sounds good to me. Like
USD stablecoin doesn't that sound better than Bitcoin? Like a USD stablecoin like a diverse basket of USD stablecoins that can't be confiscated.
It goes down. I get debased by 10% versus a decrease of 80%.
Like why would you buy Bitcoin if you know it's going to?
So did Arthur specify any reason why Bitcoin over
his thesis
or stablecoins or anything?
Is that Bitcoin is
specifically just to get off the government sort of radar?
Yeah. Well, the line of thinking is get out. Step one. How do you get out? Well, everything else is sort of, and I think his argument on physical gold is a little. He's like, you can see it, so I can tell you own it. Yeah, but like, how easy it is to see it. But like, his point is well taken for like, I can know what your bank account is. I can check the name on the deed to know who owns the house. Everything else we own is very easily verifiable, right? So I get that sort of, aside from the physical gold, I get going to blockchain. Then the thesis is that like Bitcoin is the only blockchain that is like the most censorship proof, the actual most resistant to nation state attack, which I think is honestly arguable, but like even if we give that to him, right, then the conclusion is ergo buy Bitcoin to sort of protect your value or to have value outside of the system. But like I think where we all disagree with this is that like I just feel like if you think this is going to be the case, like you should just keep stable denominated assets out of the system and then wait for the Bitcoin nuke, the Bitcoin ban. Like if you think Bitcoin's going to survive a ban and you still want to own it, well, when the ban happens, you know it's going to go down like a minimum of like 50%.
What about buying DAI? So like the biggest problem with DAI is it doesn't scale. Right.
Yeah.
But like the more value there is for
goes to
DAI,
like $1.50.
Yeah, exactly. It goes up. I mean, you see this in Argentina. Like I think Tether at one point traded for a premium because they're trying to buy as much dollars as they can, and crypto is only one of the ways that they can buy more dollars. So at some points, Tether trades at a premium. So I kind of like holding DAI because it doesn't scale as well for that purpose. But also, I'll throw another one out there. As someone who has their largest asset class is real estate, I can't believe I didn't.
Let's talk about real estate.
I didn't think about that. So, if I had to make an off-the-cuff case for real estate in the financial repression, scenario, it's that property rights, specifically your home, is like one of the most fundamental things in a capitalistic society. I'd even put it in under Europe's terms, like
until you're Roman Abramovich.
Yeah. Ouch. Yeah, you're right. Well, in any case, like I do think that might be the last place they would touch. Like, and I'm trying to think of other ways they could take the value out of your home other than actually confiscating your deed. And I just don't really see that happening because that has the same equivalent effect as austerity, as hyperinflation. Like, I mean, those scenarios create revolt, but starting to, take over people's primary holding in their net worth, their family's net worth, their home. So, real estate could be the best place to do as long as it's not.
Can I ask what do you guys know what they did to Roman Abramovich? Like he had a lot of assets in England. Do you guys know exactly what they just confiscated or what?
I think they confiscated everything.
Real estate, right?
Yeah, they took his property.
So he doesn't own the property that he previously owned.
We have to fact check that.
Yeah, I don't want to speak too authoritatively on this, but I'm pretty sure they took some stuff from him that you may have considered quote unquote property.
That is so draconian. Like the fact that is not more on our radar is alarming in itself.
Well, so I mean that's one of the cases that Arthur makes in his article is that Roman Abramovich, was one of the wealthiest people who, was Russian oligarch, but had made his roots in London. I mean, he bought a football team. He, owned property amongst other royals and other politicians. He probably
football team.
Yeah, I try to play to our European listeners and cohorts.
No, it's just a small football team.
Yeah, a football team, the football team, and he bought property. And one would think that out of anyone, he might be excluded from the wrath, but he was not. So that's to his point. But if you're not potentially on the sanctions list, then you're probably okay investing in real estate. And one way to get on that sanction list, by the way, is to somehow take a Bitcoin and trade it for oil from axis of evil country, or violate those rules however they so get delineated. So I think I guess
the game
real
theory
estate
would be
feels good.
if shit hits the fan, you have an easy exit. You can go to a quote unquote neutral country and access your wealth.
Switzerland?
Yeah, Switzerland, whoever it is. I want to dig back into the real estate thing though, because I think for most non-crypto people who are like, how do I put real estate to me does look like the obvious play, because when you are buying real estate, you're sort of doing what the government is doing. You're financing this purchase with an artificially low debt number, right? So you're sort of enriching yourself because you are paying and financing way less than you should for this asset, which, oh, by the way, you have leverage on, that is now also guaranteed to go up because inflation, right? So on paper, it looks really, really good. The problem with real estate, I think you could argue it is the absolute least mobile form of any asset you could have. It's land. You can't go anywhere.
You can refinance it to cash, and if interest rates are so low,
right? But if they decide hey. And you can see this happening. Populist government is, hey, we've decided the landowners have quadrupled the value of their land in the last 5 years off the backs of the people who have made nothing. We're implementing this one-time wealth tax of 40%. Deal with it. Just
right. Also,
and the non-landowners are the majority. They'll vote for it.
Yep.
You're
just
fucked.
vote to take your stuff eventually, right? And you can't go anywhere. You can't do anything.
I think in this case, kinetic war, the property in Nebraska just skyrockets. You've made the point in previous episodes that coastal real estate in the U.S. is a one-of-one NFT. It holds value more than anything. But in San Diego, we have the Western Fleet here. We have the Navy SEALs. We have the Marines. We have Miramar Air Force Base, aka Top Gun, and we have all these military assets. It's not a really great strategic place if you're in a kinetic war. You really want to go where where's the safest place on earth? I think it's Nebraska. And
look at this meadow behind me, boys. Look at all this land right in my little window back there.
Jackson?
I'm surrounded by just freedom.
What's that Family Guy meme? Stewie, he's sitting on the front porch in a rocking chair, and he's "It's good to have land." Yeah, that's Eric right now. So, I mean, I think real estate is a certain possibility. I'll be honest. I thought this conversation was the idea of this conversation was very tinfoily. But as we were talking, I did a few Google searches, and the fact that I found Citibank's private bank issued a note to their private bank clients being
not very tinfoil.
Here's
that's what they're telling the rich people.
Yeah, and this was in 2021, so it's not that far out. So it's looks like 100 slides on how to avoid financial repression.
I mean, it's an inevitability to me. If it's just not.
Yeah, I mean, if the global economy can't grow itself.
So I have a question to you guys, and it's is the blockchain enough to avoid financial repression, or is that just are you lowest hanging fruit? Because they'll just ban blockchain activity.
I don't think you're the lowest hanging fruit. I think you're one of the
they'll
hardest.
They'll ban it on the ramp area. because they can't stop the chain, but they can stop the ramp. They can stop
the
me from using it.
Sure.
But you could still send it address to address. But I think the best case for crypto right now is the fact that it's $1 trillion asset class, which is like meh. I think like in big terms, when the government's trying to finance trillions and trillions of dollars of debt, there are easier places for them to go. Yeah. But I could totally see Elizabeth Warren being like, I think it's hilarious that people think of this stuff as being like uncensorable, censorship resistant. It's like,
I think they're right.
Could easily happen
in the long run. I think there's a delusion amongst some crypto people that this stuff can never be. It can absolutely be severely kneecapped over pretty long durations of time. I do think over the course of like multi-decades, I sort of agree with Arthur's sort of take, in that like in this like kind of war, scarce resource environment, the game theory does play out where like neutral countries or opposing countries have tremendous incentive to open their doors to crypto, to the people who own crypto, to the wealth of crypto. It creates this sort of like massive like wealth influx if you can do that, and it's going to be very hard for people to kind of like stop that. And eventually you could see a situation where everyone's like, fuck it, we're not going to even try to control this, I guess. But yeah, but that is like to your point, my main issue with the Arthur thing is that like you are obviously going to get absolutely wrecked like in the short to midterm. If what Arthur's saying is going to happen, you're probably going to lose 90% of your portfolio. Like I don't get it.
Also, there's other things in your life that are probably not going so well. They also instituted a draft. Joke's on you. No, I think there's other things that are not so good. That's the whole thing
about the even dollar milkshake theory. It's like, if this shit plays out the way that he thinks it does, like we're all fucked.
Yeah, I mean, he's been asked multiple times. So what happens? He's like, I'll tell you, it's just not pretty. Like it's just not good. He does talk about owning gold, but I think I landed the conclusion. I like DAI as a U.S. denominated asset. I like real
love
estate.
This bull DAI take. I love this take of stable coins going
DAI
up
theory.
20. Stable coins to
DAI
$2.
Milkshake theory?
That's pretty good. I also think like I feel like we're still underappreciating RAI in a way.
How scalable is RAI? Is it just DAI? Just mainly Ethereum? I know you explained it last.
Yeah. So RAI is like, we don't want to peg to $1. Like, why are we pegging to dollars? Like, it's a worthwhile question. I think it's a question that makers asked a lot in the past. Like, should we peg to this thing that we're trying to get rid of? So RAI has sort of like a floating peg. I think it's probably about $3. But in my mind, like, I think of it as like devolatilized. Is that a word? Ethereum. Like, if you could sort of like own crypto, but like take the volatility out of it in a way. And to me, that's kind of the core proposition of Bitcoin, if you think about it. Like, if Bitcoiners are really obvious about it, like the whole thing was supposed to be like, you can have and transmit value outside of government and nobody can censor you. But the reality is they don't want RAI because number don't go up. They have the thing that goes up like 20x on top of it.
They want it to be money, but money doesn't just go up forever.
So my middle curve version, because I haven't like looked into the like tokenomics of RAI or how it works, like does it feel a little Luna-esque at all?
No.
When once you actually dig into it, so it doesn't have that. Okay.
No, it's a fork of DAI.
Okay.
I think
I haven't looked into it, so it just
it
smelled of it as you described it.
No, it's not at all. It is fully over.
Do we know what the market cap is, like roughly? Like is it tested by?
I don't know.
Market cap size or Lindy?
It's got a decent cap. It's as far as I'm aware, it's just
frac shares, you guys. I mentioned this. I mentioned frac shares about 6 months ago.
Yeah.
That's down about 90% since I mentioned it.
Yeah. Well, you had to get that airdrop and get the heck out. That was a nice little airdrop.
All right. What? Am I on the right one?
Yeah.
Okay. It's a fucking $14 million market cap. No, that can't be right.
That can't be right.
RAI.
I feel like the governance token is orders of magnitude more.
All right, we're gonna have to follow up on the RAI discussion in the Discord.
I find it hard to believe RAI is 14 million. If it is, that's criminally undervalued. But yeah, I like the general idea of that project, which is like, people don't necessarily want some crazy high volatility Ponzi coin. They want money that they can have It's like self-ownership of in a permissionless way, and they mostly just want stability and predictability, at like the base level for most of their net worth. Like somebody in Nicaragua is not trying to like YOLO like their entire net worth on Bitcoin and have it like evaporate half of it like in 3 months. It doesn't make any sense. They'd rather have dollars. We should give them the closest thing to permissionless dollars they can have that's also non-inflationary long term.
And you think that's right. And I think you're right. And the reason why I'm asking is because I think you're right. You think RAI is the closest iteration to that today?
As far as I can tell, yes. And you could argue that stuff like LUSD liquidity is like a close second, but it's obviously denominated in, it's pegged to $1, but $1 peg is what the whole world wants for the most part. So it's what the world really
wants. I mean, that's
kind of a feature.
Sort of money looks like.
I think we have to be a little more open-minded about this stuff. Yeah, any parting thoughts, guys?
No, I mean, I was curious where this conversation was going to go because like we had just like one little prompt for it, but it's a really interesting discussion. I think it's like an interesting mental exercise, but at the same time, I'm really hoping it doesn't become one. But then at the same time, like how doesn't it become a real exercise that you have to at least think about?
Yeah.
You know what's scary, you guys, is that 3 of us have like more questions than answers. I think. And where does that leave everybody else? Like we're fucked here, us 3. Where does that leave everybody else? Because like I don't have the answer. Like,
well, it's hard to get all the answers, but I think one good takeaway that Arthur and all of us can sort of converge on is that I think it is good to get some sort of value outside of the system while you still can. I do think that 4 years down the line, like it may be impossible to get value onto the blockchain from any sort of bank, and like it's already very hard now that Tornado Cash is gone, right? You may years down the road be very grateful that you have this value somewhere off the grid, like on chain. I think that'll be a good thing. Where I disagree is that you should just YOLO it all into Bitcoin right now before it's too late. I think that's silly. I think keeping a lot of it in cash for this scenario is good because you want the cash to buy the nukes when the bad things happen, right? You want to be able to hold the dollars while they're useful, but then get out of the dollars into something else if this like actually takes place. But mostly this is like a thing for like our euro and other friends.
I mean, one interesting thing is that like that could be the instigator for what Balaji calls the network state. So you have this cohort of world population that has stable coins on the blockchain, and you're not allowed to move them back into fiat. So then you have all this thing, and the only people you're able to commerce with are other people who have assets on the blockchain, and maybe that's
right. For my service, my financial advisory service, I will accept digital assets as payment.
All right.
And for your bath bombs, you'll accept digital assets as payments. Like maybe we become part of the network state. That's
interesting.
Everything.
Yeah.
Love it.
All right, guys. Well,
Let's
that's a good final thought. This is a good discussion to continue in the Discord. So if you have questions, if at some point you want to yell at us, yell us in the Discord. Do all the things. Follow us on YouTube. Like it. Surely helps us out. Mishi Arman. Hopefully see you next week. Love you guys. Talk to you soon.
Later.
Bye.